Well, that was an interesting day. Good morning, everybody. Happy Tuesday. The good news is it's Tuesday. It's not Monday anymore. The bad news is Monday was pretty brutal. So for the moment, we have ourselves a little bit of a relief pop, a little bit of an overnight rally. Is that going to hold? Don't know. I'm going to say probably not. There is so much pain out there. We're gonna talk through just yesterday's action and yeah, I mean just some of these stocks I had low expectations, right, for Upstart and for GoodRx, but I did not see this coming. I mean, Upstart's down 50% today in one overnight session. It was already down 80% from its high. Man, brutal, brutal, brutal. The good news is I've got Joel with me. I've got Dennis, and we've got Joel Kulina from Wedbush, who's our head of tech and media trading. He'll have some great thoughts on tech stocks, and that'll be at 8:35. So smash that like button, and I guess here we go. Let's start the show.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, before I bring Joel on, as a quick reminder, if you haven't checked out the new benzinga.com/premarket page, check it out. benzinga.com/premarket. This show is embedded on that page, so just watch us on that page. Now let's get Joel on. Joel, good morning. We'll get Dennis on. Dennis, good morning. How are we shaking?
I don't know.
Joel's on mute. Joel's on mute, so can't hear him. Dennis,
you're box in the way.
We steer traffic away from that page. Why are we steering traffic back there now?
Oh, we redesigned the page. It looks better.
Oh,
yeah, it looks great now. Dennis is wearing red. That's appropriate. Joel's wearing green. I think. Is that green?
Actually, no. Green would be appropriate today. Everything is up except well not everything. We'll get to those in a second. What's up? What's
up? The futures are up. That's about. Yeah, that's about it.
We got a snapback rally, a bounce, a dead cat bounce, and we'll call it a dead cat bounce because this market was very dead yesterday, very dead the day before. So we're getting a dead cat bounce here this morning. It's a dead cat bounce for a lot of stocks, but unfortunately not for a couple stocks that reported disappointing earnings here last night. So do you want to start with the disappointments or you don't want to start with the good stuff?
Let's start overnight. Joel, can you bring up your charts and let's just start with the futures as always, and then we can go to the I want to start with yesterday and just talk through the pain, and then we'll go overnight, then yesterday, then we'll get to some of these crazy movers from this morning session. Crazy movers.
Crazy.
We're in the green by 32.25 handles. This is called 32 handles. Good level on the downside. We touched that, and kind of hard to find a level on the upside just because the way we came down yesterday. Crude. Trying to find support down a $1.13, 101.96. Gold, let's just call it gold flat here at 18.58.70. Silver still in the 21 handle. That's up just a couple pennies at 21.85. A little bounce for Bitcoin, up 6.35 at 31.565. And Ethereum futures are in the green as well by $133.50.
Oh. All right, so
Ethereum, look at that bounce back. Man, wish I would have bought the dip yesterday. Just kidding.
So, all right, so as Joel just said, we're trading up here. Are we buying dips this morning after that just crushing day yesterday, or what?
I'm sticking to the same thing that I've been saying for the last couple of weeks. I'm not buying the dip until I see the data for inflation start to slow down because it's all about the CPI. This next direction is all going to be dependent on Wednesday morning at 8:30. It's the only thing that matters. If that CPI number comes in hot again, Katie bar the door, they will murder the market. If it comes in light, that's when you get your buying shoes and you put your buying shoes on immediately. So, I mean, that is all that matters. Inflation is what matters in this market. You can talk about the war, you can talk about all the other concerns out there. This market, what matters is what the Fed is going to do next, and that is dependent on inflation.
What if it comes in line? Then we
don't know. Then I don't know. But I think you're going to go with the direction. I don't think there's going to be, where we get the head fakes? I don't think you're going to get a lot of head fakes on 8:30. I think the algos are going to be right. It comes in light, they're going to rip them. If it comes in hot again, which it could, because there's been a lot of inflation still and it lags. If it comes in hot, I'm scared. So I don't know what to say. I'm too scared to load up ahead of that number and anticipate that, maybe it's going to come in light, because if it came in hot, you're going to get killed. So, I mean, that's where we're at. But expectations, what are the expectations? Can we do the CPI? Do you have that right now? Throwing you under the bus.
I have to pull
because it's really what matters.
I don't have them handy.
Tomorrow obviously is the number day. It's not today, so don't get scared. It's not 8:30 today. It's tomorrow. Yeah. But if Spencer has that number there, I'm just curious what they're looking at. Was it 8% again? It's a little lighter than the previous month. I thought expectations were. He's trying to
six. No. That's last month's reading. Whoops. What is the estimate here?
I threw him right under the bus.
You threw me under the bus. Oh, here we go. 8.1%. So last month was 8.5. The estimate is for tomorrow's 8.1. So.
It comes in 8.59. If it came in anything with a 9, this market would just get destroyed, I think. If it comes in the 7s, you could have a rip your face off short squeeze. So that's what matters tomorrow. It's going to be choppy ahead of it. You're going to see a rip. You're going to see a dip today. You're going to see multiple rips. You're going to see multiple dips. It's going to be very choppy ahead of this number. It is all that matters. That is what matters tomorrow.
Spencer, you weren't
do
here.
Like over under, like at 8.8. Franz is saying everybody put in their number what they think the CPI is going to. And we could give whoever's closest. We could give like a free 30-day subscription to Benzinga Pro. Can we do that? We do a little contest.
Sure.
I made one up right now. CPI item.
Yeah.
CPI guesses.
Let's do it here. Here's what we'll do. I'll make a quick spreadsheet and we can put your number in there.
Joel, what's your number? Actually, don't influence. Let's let the chat go for the next minute. Next minute, chat. Throw in your CPI numbers. Tom Vigor says 9.7. Young Money says 8.6.
Actually, all right. You know what? Here's what we're gonna do. Email us.
I screwed it up already.
Email us.
You got to email it. I like seeing it in the chat. Can we grab Mitch?
No,
Mitch will do the chat too.
I'm not writing down all the chat things. So
yeah, Mitch will do it.
No,
Money Mitch, you got the chat.
I'm not keeping track of the
Money Mitch will do it. Look, all the numbers are coming in now. We love our chat. There's 9s, there's 8s, there's 7s. Somebody threw 420.
All right, this is what you want to do. Email us with your guess for CPI, and we'll make the deadline. What end of day today? What should the deadline be? Like midnight tonight? We'll make it midnight tonight.
Midnight tonight.
All right, email us at the email address that's on the screen. PreMarket at Benzinga.com. And put CPI in the subject, and the whoever's closest we'll give away some swag or a free subscription or something. We'll figure it out.
Money Mitch is going to talk about the chat numbers too, but I think email us your guess. PreMarket at Benzinga.com. CPI number, and you can get some swag too. We'll hook you up.
I think
you get that number spot on, we'll hook you up.
James P says you're not emailing me. All right, you don't want to email me? Fine, then we'll do a form. Mitch is going to make a form right now. How about that?
Oh goodness, this is getting complicated.
Joel, what were you going to say before this?
It's my fault.
We got sidetracked.
Don't have them send it to PreMarket at Benzinga, because then that comes to my email too.
You don't want to get them all. It comes to mine too. Then you just screwed me. I got 1,000 emails now.
You don't check your email. Why do you care?
I don't check it because I get so many dang emails to that email. I need to block that email.
Oh my goodness.
Blue wasn't optimistic at all.
No.
Yeah.
He's scared. Blue was scared.
Yeah.
Blue made me scared, Joel, because I thought it was a little more real time. And then he says, this data lags. I'm like,
he's like 6 months.
Well, I ain't going to lag 6 months, but it's going to lag.
Oh, dear.
So
Lord.
I'm scared too. And I'm talking to people, the same thing, even people tweeting out Tampa builder, nothing going on. We were selling houses, building houses, but a few less houses to build. It's the same thing I'm hearing everywhere. It's starting to slow down demand destruction. But that is not going to be in this data yet. So it'll be in the data in 6 months. not going to be in the data today, or tomorrow.
Let's talk about some of the big movers here from this morning. We'll talk about CPI tomorrow, but man, I gotta say, I didn't see this one coming. Like I knew it'd be bad. Some of these reports are going to be bad, right? And I knew the stocks would trade down regardless, but I did not see this kind of pain. Like look at Upstart this morning. Upstart UPST is down. What is it down? 54% right now. I think my number on the screen is already outdated. It's down 54%. They reported last night. The backward-looking numbers, the earnings were okay, right? It's the guidance was pretty bad though. Q2 sales guidance below estimates. EBITDA guidance below estimates. Fiscal year sales guidance below estimates. Everything below estimates for Upstart. So the good news is, hey, they make money. The bad news is they're guiding below the street's already low expectations. And the stock that was down 80% from its all-time high is now down another 50% in one day.
This is and again, I'm going to give props to Money Mitch here because I laughed out loud because he says it's not Upstart, it's Downstart.
It is.
Money Mitch calling her Downstart. But this reminds me of Lucent Technologies, Joel, back in the year 2000. It reminds me, obviously, Lucent was widely owned. Upstart isn't widely owned, but I can remember Lucent going down, 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 and then they cut the thing in half on one earnings report. Nortel Technologies, same thing. Stock went from 120 to like 60, then had a bad report and opened at 28. So it's like the stock that just got cut in half gets cut in half again on an earnings report. Welcome to your tech bubble burst. And we are experiencing the next tech bubble burst 20 years later. The same thing occurs in all these stocks. They're all too ridiculously valued. They're all coming back in fast. What happened to Nortel Networks at the end of all that? It went to zero. What happened to Lucent Technologies? It got taken over at $1. What's going to happen to Upstart? I don't know. But Upstart actually makes some money. How did they make money? I didn't know they made money. Was that a one-time thing?
No.
Nortel was not a fraud. It was a zero. So, I just respond to the chat. But Upstart made money.
No,
that's good news.
Upstart makes money every quarter.
Do they?
Yes.
Bring it up. Okay, well, this is all of a sudden maybe a value stock. Maybe we got to start looking at this differently.
I wouldn't go that far.
I like the companies that make money. I'm surprised. I didn't know they made money. That's why I was wondering if it was a one-time thing or like I didn't know they made money. Yeah. Let's go look. We're looking at the details here.
This is for the earnings calendar. This is in their history as a public company, which isn't very long.
Show me.
Right there. EPS every quarter.
Not bad. Okay, at a certain point in time, this one I'm going to say is probably they're making money. I don't think, but Nortel made money too. I don't think it's a zero. So I don't think it's a zero. I don't know if I'm coming in and being the hero and saying 35 is the bottom, because if you were the hero at 100, you're down 70% of your money, which isn't good. 77 yesterday, you think you're the hero. Now it's 35. And these things don't just bounce back. So I think there's some value somewhere, but maybe a wait until it actually stops going down. I don't know. Joel, what is your thoughts here? I mean, you've been quiet the whole morning. I don't even know what to say, because if it's really making 50 cents, 60 cents, $1, I mean, okay, well, add that up. It's making $1.50 or $2 a year. I mean, now you're starting to get into value territory on what was supposed to be disruptive technology.
Did they give some guidance?
Wasn't good.
Right. Yeah. The guidance was bad, right? Let's not let's not pretend it wasn't. The guidance was bad. So yeah, they make money, but their sales guidance, their EBITDA guidance, all that came in well below where the street was expecting. So that's going to hurt you every time.
I can't find anything here. I mean, I went back to the weeklies and
you got to go right back to the IPO day.
Yeah, exactly.
We're back to like the first month of trading. We're almost at all-time lows. The stock went. This is incredible. Stock goes from $22 in the first month of trading to $401 when the guy on CNBC gets thrown under the bus, asked what they do, and he couldn't answer the question, but he was loaded up in it. That's telling you the dumb money that owned this thing. And now all the way full.
Dennis, that guy speaking at Benzinga conference. So
Thanks,
don't call it dumb money.
Is he really?
Yeah.
He's a technical trader. He doesn't have to know what the company does, but yeah.
Well, I hope he sold it.
I'm sure he did. I don't know, actually. We'll find out.
Anyways, I'm saying you should know what this company does on CNBC. Speaking or not speaking, I don't know anything about that. It's not my job to know about that. I'll speak what I speak. So don't like it, too bad. Upstart, $400, down to $34. It's ugly. Hope that guy sold.
There's a monthly low at 22.61. I'm just going to go out on a limb and say that it's not going to get to 22.61 today. I don't know. There will be a rally at some point. I guess the thing would be to check your pre-market low, and maybe try and hold your hat on that. Really, the only way if they keep crushing this thing is buying some at 34, buying some at 33, buying some at 32. I mean, if that's your style of trading, but right now, just right on the lows of the pre-market session, no one's stepping up, so keep an eye on your pre-market low, and maybe you get a little dip below that, and then it comes back up. Tough strategies. If I was short, I'd be throwing some bids out
If I was
there.
short, I'd bring it in.
Yeah.
And I think you're got a company that actually does make money. So if that continues, I don't know. But if you're short this thing, the easy money, wow, earnings into the earnings, it was easy money. What was the expected move on this thing?
It was like 20 something percent.
Holy man, they're pricing in even that much on an expected move, and then down 54. I mean, all-time low is $22.61. I don't know what the IPO public price was. That's always one to think about too. So if you know that number, spit it out. I don't know what the actual underwritten price was on this thing, but $22. The only thing we do know is $22.61.
I would tell you what the IPO price was. How about that? $20.
There you go.
$20.
Huge. There's good support down there.
Yeah.
That's also
Yeah, I mean,
$34 to 20. That's another nice haircut.
If you really want to
40%
trade
haircut.
this thing today, I mean, you could probably go back and drill in on your dailies and find some things. I don't have any interest in trading in it, but that would be the only way to take a look at it. Find some daily levels from way back to when. What was that? In 20. IPO'd in late 2020. So drill down on your dailies if you want some levels in that.
All right, Upstart, not the only big loser of the morning, of course. GDRX, GoodRx, the online pharmacy, down 36%. I think what does it say on the screen? It says, oh wait, no, I skipped Peloton. Sorry, let's do Peloton now. That's what's next. Peloton is down what now? 24%, give or take. As expected, the bar was low, and they missed. And this is the thing, their EBITDA, right, which is one of your gauges of profitability, going in the wrong direction, right? Last quarter, I'm sorry, in the same quarter last year, so a year ago, their EBITDA was $63 million. Last quarter, their EBITDA was a loss of $266 million. So going the wrong way on profitability. EPS missed, sales missed, the whole thing was bad. But yeah.
Well, I figured out the trick to investing.
What's that?
Well, I learned it from Dennis.
What's that?
The losers in your wife's accounts.
Yeah, put the losers in your wife's accounts.
Yeah, this is
not
it. So
Joel tried to tell her to sell it for a year. You've been trying to tell her to sell this one for a year.
Yep.
So you were right. Your wife was wrong on this one.
Yep, and she is in no mood to be told Peloton's at $10. So I won't tell her. Bouncing off. Yeah, you had a couple lows under 10.
At least I saw in the earnings that even Joel the instructor couldn't turn this stock around. I was riding with you this earnings. Whoa!
Joel, you look great on that.
I've been seeing you on there, Joel.
Joel, you look great on that thing.
You're my
I
favorite.
I should buy a Peloton. I was talking about it.
Is Mitch up to like his old tricks again?
You know it.
Let me see. I don't see. Did you have it on the screen,
baby?
Oh, you've used that one before.
Yeah.
It's the best. He looks awesome on that thing.
It's the best one.
I am in great shape. I swam 2,000 yards this morning, so I don't know what
Joel
you
is
guys
in good
did.
shape.
Nice one.
Yeah,
nice one.
In the pool 5:30. So.
I mean, I'm pissing everyone off today, so I might as well piss more people off too. This was literally when I tweeted it out when we had the rumor that Amazon was going to buy it at 35. I tweeted multiple times so that I would be a seller up here at $35 and
You
that
were.
nobody was coming to buy them at $35. Zero people. I had 500 messages at me telling me how stupid I was, and this was getting taken over at $60. It is now 10. I think I was right. Might get taken over. Might be at $1. Next.
I think someone's going to buy him. Do I think someone's going to buy him now? I don't know. Probably not. But one of these days, I think someone will buy them. I just don't know who, and I don't know at what price. GDRX is where I was going to go before this. Disaster down 35% this morning. The online.
I just one good news thing on Peloton. Emily got one, and she just didn't like it, and she scratched it. She got someone. She scratched it. She got someone. I'm like, someone. You didn't lose any money on buying that thing, so that's the good news. Emily scalped out on buying her Peloton, so that's good news. Right, we're on GDRX.
Yeah, GDRX, same story. The backward-looking numbers were okay. The forward-looking numbers were not. Their Q2 sales guidance was light, and then they said, do you guys remember the guidance we gave for the fiscal year? Yeah, we're not gonna hit that either. So for you can throw that out because we're not gonna hit it. So
another disaster, right?
Yep.
This is just fun. Investing is fun. Invest in value. Invest in reasonable valuations. You don't invest in storied growth stocks. You trade storied growth stocks. You don't invest in them. If you are investing in this is what you get. So, I mean, it's all about bottom line. We've said this before. When the story is hot, valuation doesn't matter. When the story goes cold, it's the only thing that matters.
And then when the story goes cold, earnings don't matter. Like good news doesn't matter. Like these companies probably could have come out with good reports today, and it wouldn't have mattered. I don't know if Upstart would be down 50% on a good report, but they wouldn't be up either. Good news doesn't matter. Everything is down.
That's it.
Who's eating their lunch? I mean, is it just did people still going to drugstores? Is there
it's Amazon?
Amazon? Yeah.
Yeah.
That makes sense. Costco is probably cheaper. Yeah.
Probably. Costco. Yeah. Costco pharmacy is dirt cheap.
Yeah.
Costco is not cheap.
No, the pharmacy.
Oh. The stock itself has come down nicely, though. I would be a buyer Costco somewhere, but it's still expensive, man. I wish Costco would get in that value territory, like 19, 20 times earnings. I'd load up Costco. Wouldn't you, Joel? Got to 19, 20 times earnings. Where's Costco?
Wow.
30, 35?
Quietly lost $100 here.
Yeah, I know. And this is what we've been saying. They're going to come for this stuff. It's hard to say, I don't want to toot our horn and say we've been right. We've been right about a lot of stuff, man. It's another thing. We're saying consumer staples. We said it 3 weeks ago. We were early on it. Said it 2 months ago that you can't hide in this stuff, that eventually they'll come for this stuff too. They're coming for it. It's the everything sell-off. You are now feeling what a real bear market's all about. And it's when you hide in stocks, when you're hiding in stocks, you get punished. When you hide in crypto, you get punished. When you hide in Bitcoin, it's supposed to be a safety trade, you get punished. Hide in US dollars, you lose to inflation, but at least you're not losing 5% of debt.
Yeah.
What about the utilities leading us up? I mean, if that wasn't like a warning, higher interest rates, utilities leading us higher. Wow. I mean, that was that warning signal.
And they're coming off now too.
Yeah. Got a great level for you in XLU here if you're trading this thing. Got a quad top here, 7150. So where we trade is a little bit higher than that? Let me see my data window. If you trade this, no, 7250. I'm sorry, major level. Unless this thing gets over 7250 in a jiffy, you're looking at 70. You're looking at 68. You're looking at 66. So big level there. Low risk short here at 7181. For leaning on the 7250.
What about the oil stocks yesterday?
Oh my God.
I mean, we called this too, folks. We called this yesterday morning on this show. Chevron opened at the high tick. It opened right at the high tick, 167.75, and then lost $10. I think it's time to not be hiding in this stuff. I think it's actually time to start selling some of these winners and actually buying some of these losers. Not necessarily the upstarts, but maybe you got to find the ones, and I don't know, maybe it is Upstart. You got to find the ones now that maybe you're coming down into reasonable valuation land. I don't know if Upstart's the one, but I mean, you're hiding, and there's been so much rotation into commodities for the last year. All the crowded trade is there. Look for what the next crowded trade to come off is, and I still think it's oil. I mean, I sold my new core after holding it for so long. I have one small piece left, very small piece left, and it was right there. It was $175, I think I sold it at or something, and I was like, it's just gotten too far. It's gotten too stupid. And I still am of the opinion that we're going to get demand destruction, which is going to filter itself down to steel, which is going to filter itself down to oil. Yes, we still have a war, but we've had a war premium priced into these stocks. So if we start getting demand destruction, a lot of that is not priced into these stocks. And that's the next real, trouble coming here is demand destruction. I don't care. It's happening, whether you like it or not.
Actually, I was looking at one of my portfolios yesterday, and it had some really huge, winners in it. It had some small losers, and I almost felt like swapping everything out, like that, like taking profits on all the stuff. Maybe not, necessarily, doubling down on all, the things that we're in, but I'm just like ring it, man. Just ring it, bring it in, set it, forget it for a few days, and then reapply it. But got to stick with what got you here. I tell you, you're not going to get your crush in CVX. There's one thing, CVX and Oxy. There's one thing that's going to crush those stocks. One thing only.
If Warren sells.
There you go. And he just bought last quarter. So, and he's been buying. So unless he's like doing some scalp and day trading or whatever, he's loaded the boat in these. So, Warren, he got you here at this point. I don't know. That red candle there in CVX and Oxy, that may be,
That's the
may
one
be
that catches you. That's the one that catches
know,
everybody
it
because they all
does.
come in on day one and they buy the dip. And then you get a little bit of a lift and they're like, oh, yeah, here we go. And they pull the rug out from it again. So that candle is like a catch candle. They put that in the technical analysis book where you get caught, you got stock in an uptrend, you get that first big red candle. And that's where people are like, oh. And they're like, but, it's in an uptrend overall, so we better buy this dip. And the overall market, though, is not. And now you got people caught here, too. So it's not 2020 anymore where every dip gets bought. It's 2022 where we've got an overall downtrend. We've had a sector trending up, and that's a break of trend. So a potential break of trend. I don't like that candle at all. I'd be a seller of all oil stocks on every rally.
I could give you a longer term for this Oxy here. Just something if you've been in this for a while, you got it. It's sticking out at you right here, and go to your monthlies, right? Because this is a 3-month endeavor here. We got up to 63.24, had a little bit of a failure. You got up to 63.56, you had a little bit of a failure. This month you exceeded that just a couple days ago, 2 days ago. You got to 64.98 and you failed. So, I mean, 3 monthly tops in a row. Look what it did here. 3 monthly tops and then another 3 monthly tops. So I'm not saying it's imminent. It's going down tomorrow, going down next week or 2 weeks or 3 weeks, but I'd be real, the big boys that wanted to sell between 63, 64, 65. Now they're they're going to have a meeting with their technical analysis guy, and they're like, man, we just can't get out there. What do we do? And they'll say, well, bring your offers down to 60 or,
Yep.
something like that. They're going to bring on a bar like that, they're going to bring their offers down. And now everybody that was late to the party, if you bought this in the last 4 days, you're scratching your head like, oh man, I bought it at 58 and it went to 65. I didn't take my profits. Now I'm flat. What should I do? So that's a setup there for you in Oxy.
Look at the chart of Nucor. I believe this is what the chart of Chevron and Exxon are going to look like in 2 weeks, 3 weeks. I think it's going to look the same, unless we get some CPI and they just go nuts on it. But I mean, I think you've got now break a trend. You had everybody crowded into those trades. I had people like texting me, got to buy these oil stocks here, that we got the war going on and Chevron's going to 200. I think they're wrong. I think they're on the wrong side of the trade. Death candle's a good name for it. I don't know if that's what you call those. I'm not a huge technical analysis person. You know that. I'm relationship based. Somebody called this a death candle. I like that name for that. When you have a nice uptrend and they get the hard red candle, called it a death candle in the chat. I like that death candle name.
That
I
might
would
be a
call it
new
a
one.
death candle too, because that's where death is going to start. So where you've got everybody caught in one day, this is what happens. People get caught in one day and they're like, oh, it's just one day. But one day, sometimes that. Mitch, you got something to say on that? Death candles?
It's
You popped in.
bearish engulfing candle.
Is that what it's officially called?
That's
Bearish
what
engulfing
officially
candle?
called. When
Yeah.
you get the body of the red to eat the green.
I like that.
Bearish engulfing candle.
Pac-Man.
Gotta bring the technicals, man.
I like
Come
that. He's
on.
got the technical terms. I didn't do my technical analysis. What's that thing called? Your CMT?
CMT.
Chartered
Yes, sir.
Market Technician.
Yes,
I don't
sir.
know all these. I make up
I'm
all my
working
own
on it.
names. I learned all grassroots. I make up all my own names for anything. I see somebody death candle. Death candle's better. Death sounds better. Like death cross. Death candles. I like that better.
Let's talk GM for a second because Dennis, I believe you mentioned Kathy a few minutes ago.
Yeah.
And this was a surprising one. I noticed she did some buying yesterday.
She bought General Motors.
But she bought a new one. She bought GM,
This is
which
incredible.
I don't believe she'd ever bought before. No, I don't think she did. And so GM is disruptive innovation now.
Yeah, it's disruptive technology.
Kathy owns, or I should say Kathy, ARK Invest owns a little more than 158,000 shares of GM right now in their ARKQ fund.
She's switching up the script. She realized not working. I actually like, that she's switching it up a little bit here. The one problem is I'm not buying. I own a little piece of GM. I kept a little piece there. I sold in the rally. What was it? April. In that last little bit when I sold all my Ford, I sold half my GM because I'm concerned that nobody's going to pay these prices for new vehicles. And I think that is the concerning thing. And I do think GM has tougher times ahead. But it's a value stock. And is it going to get through this? Yes. Is it a zero? No. So I like that she's starting to go to other types of companies here. Very shocking because I wouldn't think of GM as disruptive technology, but I'm telling you, they're going to be a huge EV player. So maybe she's reading at that. I've said that for a long time. GM's going to be a huge EV player. If the EV story was still hot and the market was making new all-time highs, I'd be long GM still. But we're not in Kansas anymore, and you've got to adjust on the fly. I want GM back in my long-term portfolio, a bigger size eventually, but I don't want it when I'm getting demand destruction all around, and automotives are going to be at the top of the pecking list. So that's why I'm not buying more yet. But I do like GM on the watch list.
Didn't make a new low for the move yesterday, so that's good on a relative strength basis. Also, you had a little bit of a gap fill, which is also good if you were worried about that. And I'll just go with the one number, make Triple D happy, $40. Yeah, two highs the last 2 days, just over that. Psychological, I think you get over 40, you get bid at 40. You get a little bit more on the upside. If not, just more of the same, pop and a drop.
Imagine I don't know how I'd feel if I was a GM shareholder. I imagine if you loved Kathy, you would love this move. If you hated Kathy, you would be like, "No, she's buying my stock," and that scares me.
She did a lot of buying yesterday.
Yeah,
most of them more the same. Square,
Yep.
Path,
Yep.
Coinbase. Oh, I have that little small piece of Coinbase. That was a mistake. Bag holding that.
The crypto.
It's like
stocks,
nothing left of it.
The crypto stocks. I mean, they do have a higher beta than. I think when Bitcoin moves down, they move down more, right?
Oh, yeah.
So coin down to 85. Yeah, that's
Well, the MSTR, and again, I was saying this yesterday, but apparently, they're levered up on this,
They
and they're
are.
all underwater here now in Bitcoin. But if it gets down to 21,000, apparently they got to do some selling. So I mean, that's scary.
It's tough.
So this is why you're seeing these stocks just get absolutely murdered. I do have the high blockchain still. Bag holding that thing. That was in the long-term portfolio because we do love our friend Frank Holmes. Frank is a victim of, obviously this entire sector and Bitcoin just get murdered.
I want to get our guest thoughts on all this. Joel Kulina, who's the head of technology and media trading at Wedbush Securities. And he's got, I think, a silver lining here as it pertains to tech. So, Joel, good morning.
Hey guys.
You made a comment in your note this morning that stuck out to me because we've been pretty bearish, here. So I just want to start with the silver lining comment you made when you were comparing this to the .com bubble, right? and you said, well, at least this time around, technology is the foundation of our lives. It's not discretionary. It's a staple in some way, right? So at least we can lean on that, right? At least there is some technology that we know is never going to go away.
Yep. Yeah, exactly. And thanks for having me back on. Yeah, I mean, I read that somewhere, then I kind of just went with it a little bit. Obviously, there's a lot of people making the correlations to the .com era versus where we are currently. There's definitely some similarities. There definitely was an elevated, uptick in spending, ahead of the apocalyptic, Y2K. And then obviously COVID's just kind of obviously created such a muddy picture of everything. We saw this pull forward of demand. Companies were able to cut spending, cut their investments, run a little bit more leaner, but obviously demand came back at such a quicker pace than anyone could ever have anticipated. And now you have companies actually kind of cutting spending. Amazon talked about having way too much warehouse, capacity. You had Uber over the weekend say they're going to, start looking at expenses a lot closer. Facebook has said similar as well. And these aren't small companies. So that's my one concern. But as kind of touching on my point, yes, it is different. Technologies are much more ingrained in all aspects of our lives, whether it's, the hybrid work from home situation. We're still seeing a shift to the cloud, increasing cyber threats, things along those lines. But obviously the TMT bubble has bursted. I don't know if yesterday is the bottom, but it does feel like the bottoming process finally has started in the sense, we really saw an uptick in volume activity yesterday and really hadn't been able to say that kind of up until really Friday and yesterday.
So what are your thoughts here? I mean, and Joel, you've been absolutely correct on a lot of stuff. I saw you even on CNBC last week, and you're one of the few analysts that got on CNBC and talked bearish on a lot of these stocks because they all go on there bullish. I have so much respect for your opinion, and you've been absolutely correct on a lot of this disruptive technology, saying the pain train is still ahead. I mean, it has intensified significantly here in the last few days. It feels like capitulation on some of these names, like Upstart this morning, down another. I mean, it just keeps falling here in the pre-market. I mean, this is like just washing out everyone. Down another 58% today. I mean, this is a stock that was down 70 or 80% coming into the print. Goes down another 58%. This is the definition of capitulation. It actually makes money. But are we getting to a point on some of these stocks where you could have a capitulatory bottom?
It's starting to feel like that. So I didn't really turn constructive on Friday. And I remember looking at my screens, Shopify got crushed on Friday as well. And people were, dipping in. And then look what happened yesterday. I counted at one point at least 60 to 65 stocks on just my TMT monitor, US TMT, were down at least 10%.
Wow.
And so yesterday's kind of move on the elevated volume, I think volumes for the NASDAQ were up 22% versus a 20-day average. We know there's been some forced selling, forced de-risking going on, especially within the tech community. So, yeah, I mean, I think you'd be dipping in, and I obviously want to be selective. I think I've tried to, maintain the world isn't completely ending. But in terms of the story stocks, look what Peloton's doing right now. Upstart, as you mentioned as well, Zoom, DocuSign, these high-flying, cloud SaaS names. I think it's too early to dip into them. I think, like a name like Unity, we love the story.
Yeah.
It was trading at 100 times sales at one point. Recently, 40 times sales. I think it's around 15 times sales. They report tonight. We'll see the reaction. That could be a very good indicator for some of the high-flying growth names, again, because that stock got murdered yesterday. So keep an eye on Unity tonight. We know they got a great CEO. It's a great story. We'll see if there's any appetite. But as of right now, as what we currently know with the Fed's current, kind of path as well, nothing really says you need to dive in head first. Yeah, you maybe pick away maybe a quarter or 30-year positions and names you like, but we know corporate cloud demand remains strong. Look what kind of Azure told us. Google Cloud was solid. IBM surprisingly put up a decent print as well. ServiceNow. So we are getting pockets of positive. I don't want to call them green shoots, but I think you just got to be very, very selective versus trying to be a hero.
It's so tough because ServiceNow put up a good print, goes up for a day, and then gives it back. And now I'm starting to break down, making new lows. It's like, and I said this yesterday on the show, I mean, it seems like when you disappoint, they hit you down and murder you and keep murdering you. And when you beat on these growth technology stocks, they bounce for a day or two, and then they eventually give it back and start going down anyway. So it's like lose. Shorts win on both sides.
Yeah, and you guys touched on what happened to energy yesterday as well earlier in the show, and that's why I'm probably a lot more constructive as I sit here today than I was at any other point in recent weeks, because we've started to see the market generals being shot, and that's obviously large cap tech, energy just carried out. Expedia's numbers last week were very interesting to me. We know the commentary has been extremely constructive from the travel reopening space, whether it's from the airlines to the hotels to Airbnb. And again, they've just been murdered the past 3 to 4 days as well. So I think, again, that to me indicates there's just broad-based capitulation, forced selling, and is probably, a sign that like I said, you probably can start dipping into selective position. But again, any of these names attached to Cathie Wood, I wouldn't buy them with your money. And that call's worked out perfectly up to this point. And I still think it'll be interesting what happens if her assets really, flee. It's shocking to me. Again, I think I woke up, was it last Thursday morning? I think Wednesday we had the market squeeze after, during the Powell presser, and you wake up, you see the headline, ARK funds see the most inflows in over a year. I mean, that's madness. So, I mean, it shows maybe psychology is not weak enough in certain pockets of these stocks. We know what's going on in the crypto world. With that continues to that bubbles continues to pop, and it's probably yet to fully burst. But yeah, it's avoid the story stocks, avoid those high growth names. That again, I mean, we're never going to see those valuations for probably ever. It's just the reality we're in.
What about an Airbnb?
Yeah.
And this is a story stock. This is a higher growth name, but this is obviously really is disruptive. I mean, I look at this and think at $119, can it grow into this valuation? I mean, this was the question on a lot of these. I'm like, most of them, the answer would be no. But I look at this and think, I don't know if that's the case. I mean, what are your thoughts here on this one?
I mean, the story is great. I mean, I think the story is fantastic. And like I said, I thought they put up, I skimmed their conference call last week. And I think again, like a lot of the other travel reopening plays, they sound very bullish on the trends heading into the summer. We know they're a very disruptive company within the leisure space as well. And people are still, I mean, I guess it comes down to reality is we know the consumer's slowing. And that's part of, Upstart's blow up this, last night. Delinquencies are on the rise. So that's kind of, I think, what's weighing on obviously the travel names is the fears have now become, is this the best it's going to get? Are we at peak travel, peak reopening? I don't think we are. But I think that's what's kind of been weighing on the likes of, like I said, Expedia, Bookings, Airbnb. And I think you want to be buying the weakness in some of these names for the very reason, stick with the companies that have put up decent quarters, put up healthy guides, and more importantly, their conference calls, were for the most part very constructive as kind of they still have multiple tailwinds behind the story.
I mean, this Expedia chart too here, $180. These falls are these are unbelievable, really, when you put it in perspective. This last week, the indices aren't doing justice to what is really happening when you lift up the hood. You've got a lot of stocks down 30% in a week. I mean, Expedia in 6 trading sessions went from $180 to $127. I mean, maybe Spencer can look up the PE on this one in the background, but Expedia, to my knowledge, makes money. I don't know, like if it's cheap stock necessarily, but at a certain point it probably is. I mean, this is unbelievable, some of these moves. You just mentioning even, and then you can even go into some of the value names, and they've been hit as well. But I tend to side with, I think eventually we got to start putting some money to work here.
And also kind of a name that a group of stocks I may have been right in avoiding kind of the high expensive software and obviously avoiding the Cathie Wood story stocks. But again, I've been upbeat on cybersecurity, and look at those stocks yesterday. I think there was 5 or 6 of them were down 10%. So that again speaks to they're coming after every corner of the market's been carried out. Maybe it may not be the bottom, but it's definitely it's what you want to see when the bottoming process is truly begun and is in motion. Again, energy carried out, cybersecurity, the travel reopening names just slaughtered as well. But look at the cybersecurity. We know threats aren't going to decrease anytime soon. I would still avoid the names like Zscaler and CrowdStrike, only because they're still trading, north of 25 times sales. At least they were. Who knows where they are today? Probably a little bit below there. But yeah, I'm trying to stick with themes where companies actually still sound constructive on demand. And you mentioned value. I mean, look at the value chat, the chart. Just the spread between value and growth on a 10-year basis. Value is still massively underperformed, and that I think that trade continues to work. And I think I said it on CNBC. It felt very dirty saying you probably continue to buy IBM, buy Oracle. Again, those names will continue to work. I don't include Intel in that camp because they have a lot of spending ahead of them, which is still going to be a massive margin headwind. And I think the story there is still a complete, cloud and mess, to say the least. But, I think stick with value. And then again, try to maybe dip into themes. If you're not there already, dip into themes that at least there's some tailwinds behind them versus all the mess otherwise. But yeah, consumer slowing. We still know the Fed, is in the midst of a tightening cycle, still very uncertain in terms of where we are in inflation. And from what we would know right now, I mean, hopefully we get a signs that inflation's peaked, enter a disinflationary phase, and then we can get more clarity from Powell and company, and then you can become a lot more bullish on tech overall. But what we know right now, it just seems like you're throwing blind darts at a board.
We're on the line with Joel Kulina, head of technology media trading at Wedbush Securities. Joel, what about the deals, the risk arb deals out there on the table? Warren Buffett gets involved in the Microsoft and Activision trading at a huge discount. Also, Twitter trading a good $6-7 away from Elon Musk's takeout price. Just taking a look at those two deals. I mean, the environment, that we're in, what do you look at the likelihood of these deals going? And then is this, if these deals do go through, do you just think the M&A is just going to be dead until this market stabilizes?
Yeah, I mean, the Twitter, I didn't read a ton of it. I'm sure all your viewers and you guys have read more than me on the. Obviously, there's talk that Musk may reprice the Twitter deal, given just kind of what's been going on in the market the past week or so.
Mhm.
It all seems like it seemed like a circus from the first time we got the headlines that Musk was exploring a deal, and it's pretty much become a circus. So I've kind of avoided that as much as I could, to be honest with you. I feel like it's been a waste of energy. Activision is very interesting. I mean, we know. It's a natural fit for Microsoft, what they're looking to do within the e-gaming ecosystem, and obviously competing better versus Sony in terms of first-party content, and obviously the Xbox, subscription pass boosts that. The spread is massive, and I think it speaks to really up until 2021. Microsoft sort of been going under the radar. They've made some decent sized deals over the year. They never even, no one even questioned it in terms of a regulatory view. But imagine if it was Facebook buying Activision, the uproar that we would have seen. So I think Microsoft's being a lot more scrutinized than it ever has. We know there's new leadership, the FTC, DOJ. I think the deal gets through. I think Microsoft was fully aware of all the potential regulatory concerns in terms of the impact to the consumer. So I have to think they're going to make a lot of concessions. Offering content updates and obviously all the titles across all platforms, not just on the Microsoft ecosystem or Xbox platform rather. So I think and then it's also scary that Warren Buffett, that's one of the only big trades he could find out there last quarter, was buying a risk arb deal, which is kind of unlike him to a certain degree.
What about this? I mean, I was looking at the big boys to fall, and Microsoft yesterday. I don't think this is really in your area of coverage, but man, it took out that 270 yesterday. Yeah. That was the July low. Then you had 3 monthly lows. You did back. You're right there right now. Back at up 519. I mean, if you're looking for me, like one barometer for the market. I mean, if this thing fails at 270, I think just overall, there's just, going to be a lot more downside on the market. If it was just a undercut and rally yesterday, and it's going to go back in the range. But that, you look at, Apple, Google's obviously come off, Amazon, Tesla's been in, been getting hit, but they finally went off. And that thing's almost $100 off its all-time high, too. So really be keeping a close eye on that Microsoft 270 today.
Yeah, exactly. And again, it kind of goes into that whole theme, the market generals, we've gone over, I feel like over the past 4 or 5 years, we've had periods of concern when the large cap tech names are such a concentration of the market outperformance. And again, it works in reverse, right? And really Apple and Microsoft Alphabet had been the outperformers within large cap, mega cap growth. But again, I think Microsoft, Alphabet, they're both roughly 25% off their highs. Apple was 15 to 17% off its highs as well. If there's more downside here, again, as you guys highlighted earlier, there's definitely a disconnect between where NASDAQ and the S&P are trading versus what's going on under the hood. So if these names crack further, they're the easiest, they're liquid, they're easy names for people to sell when you have to de-risk and take down your gross. So it's something to keep an eye on. But as I said, at least yesterday we had big volume. The selling pressure was broad-based across every corner of the market. And I think that's how I'm constructive, at least from a technical point of view. It feels like some of the pain, was finally seen, and guys were forced to kind of sell stocks they probably didn't want to sell.
Joel, we saw yesterday or over the weekend, the CEO of Uber sent a letter to the whole company saying it's all about free cash flow now.
Yep.
To your eyes, with regards to tech, what metric, what ratio, what number are you hanging your hat on? Is it free cash flow? Is it just forward PE? Is it something else?
Really just kind of, looking at margins, just, companies being able to maintain their margins. We know there's pressures everywhere, still in the supply chain, the impact from China growth. There's a lot of companies have been dealing with having to, cut prices, more on the consumer tech hardware side of things. But yeah, I think obviously everyone talks about cash flow, but I think for me as a tech guy, see where margins are going. And obviously you want to see these companies rein in their spending a little bit. The flip side is, what does that really say? What are these guys seeing, in the economy where they're all of a sudden now become, concerned about, expense controls? We haven't seen that in quite some time.
Yeah.
Like I said, Amazon was they admitted to that on their conference call that they spent too much. Facebook's reining in their metaverse kind of obsession as well. And like you said, Uber early in the week, and IAC. I can't really remember the words. I did include a blurb in my note if you guys want to read. But look at what Interactive Corp said last night. Now they're a company, they obviously go after startups and they're very active on M&A. They pretty much said it's going to take years, not months, years for these valuations to even get near to where they were, if ever. Probably never will. Now, granted, they're probably talking up their own book because that's their game, so they benefit from depressed valuations. But I can't remember a conference call where a company just came out and said that. And again, if you look at what stocks have been doing, it says a story. And then obviously you have, BAML, Goldman, Citigroup, all pulling back from SPACs as well. That bubble's obviously completely burst at this point.
Yeah.
I mean, it's pretty incredible looking back the past couple of years, some of the craziness and whatever you want to call it, thievery that was going on in corners of this tape. And now it's just completely unwound. Kathy Woods, the emperor without, any clothes. It's just kind of comical to some degree.
Joel Kulina, head of technology and media training at Wedbush Securities. Joel, always appreciate your perspective. Thanks a lot.
All right, guys. Good luck out there.
All right. Yeah. I mean, look, I understand that Joel didn't have a lot of bullish things to say, and neither have we, frankly, throughout the show today. But I want to reinforce the idea that in the short term, in the intermediate term, yes, things look extremely dicey, but keep in mind your time horizon, right?
Are people saying we're being overly bearish today?
No, I'm just trying to compensate.
I mean, we always give a balanced opinion on on stocks and the markets and stuff.
I'd be buying stocks.
Yeah,
I'm out the like.
Yeah, people are going to complain no matter what.
No one's complaining. I'm just trying to not be all doom and gloom because
I think you're getting towards a point where you can actually start buying some of these beaten down growth names as long as they're starting to get into reasonable valuations. I mean, some of them aren't. I'm not going to buy Peloton $11, but the Upstarts intrigues me. It does intrigue me here. I don't want to be the hero, though. I'm not going to be the hero and try to buy a 32 and that's 25 in my face. But, Karen Finerman uses a 3-day rule. Maybe the washout continues. Maybe it bounces. But, I mean, if the company, like you were showing me, actually makes money, and I have to do more research because I don't follow the company close enough to know that this is going to be consistently making money, or if the business is going to start to, obviously not do as well with the lower guide. I mean, that changes things. At a certain point, some of these stocks are actually going to be buys. So, and it actually is intriguing that Kathy is starting to look to more value names. but she's still buying the other growth names too. I like Square, but I mean, I can't buy it ahead of the print. I mean, when does Square report? Or did already? Did it? I don't remember. Did Square report yet?
Let me tell you. They report on they were a few weeks ago.
They were a few weeks ago.
No. They were last week.
They already reported.
I wasn't here for that.
I can't buy it ahead of the CPI print is what I meant though when I said that. But I'm just curious with the earnings. Yeah, I see when it's reported there. I think it actually gapped up that day. But I can't buy any of this stuff ahead of the CPI report because it's just too dicey. So have your shopping list ready. If CPI comes in light, you start buying all these names. CPI comes in hot, you can't touch any of them. I think it's a binary event. I mean, the options are going to price all that in too, so it's hard to say I'm going to place your bets now. But there is so much, Joel. There is so much dependent on this CPI number tomorrow. I don't think we've ever, in probably the history of this show, had a more important CPI number than this one coming tomorrow. So
even beyond this show,
it's been a long time. Because CPI hasn't mattered for years because we haven't had any real inflation. At least the way that they put the number together. But I mean, we're at a point now, they've priced in some really bad stuff into this market. To your point, Spencer, I mean, this has been ugly. And there has been a lot of stocks that have been absolutely murdered. There is going to be some money to be made on the long side here. We just need a green light. CPI can give me the green light tomorrow. I might do some buy-in, but it all depends on that number.
And again, the stocks you're looking to maybe nibble in a little bit, they're companies that have revenue, that have earnings, that are not moonshots. Like Matt, we got a question in the chat from Matt Miller about Rivian, right? Because Rivian reports earnings tomorrow after the close. Rivian is pre-profitability. They're losing money. So okay, maybe they go in the right direction. Maybe they are getting closer to break even. I don't know what they'll say tomorrow, but like that's not the kind of company you want to be nibbling in right now. A company that's losing money. Right.
Ford couldn't sell any of their stake until the lockup was over, huh? That just must have been absolutely gut wrenching.
To say, please let us out. Let us out. There's so many suckers out here.
I don't know when they're in.
Oh boy. I mean, it's still. I think there's going to be less cars. I don't know about the whole car thing. I just think there's just going to be less cars. I don't know who's going to be making the cars. So Rivian, where they make one thing. I mean, I'm kind of.
Well, I don't even know the Rivian car. Can we
It's like a van, isn't it?
I like it. I've decided I've decided that I like it. Yeah.
You gonna buy one?
Cars.
No, I'm not gonna. I can't afford this stuff. I'm not gonna buy it.
Done with cars.
Like $80,000.
Joel's done with cars.
I'm gonna buy a new bike.
80 grand.
I'm gonna buy a Peloton, Joel. I'm gonna go on Kijiji.
You need to start working out, Dennis. If you work out, what are you like 220 now?
Oh, geez.
I ran 5K yesterday, Joel.
All right,
really?
As bad a shape as you think. I've been running for a year and a half. I'm not as bad a shape as you think.
Okay, all right.
But
all right, we got 2 minutes.
I do like ice cream.
Hey, wait, real fast. wait. Before I forget, on the CPI note, I put a link in the chat. The link goes to a Google form. If you want to enter your guess for CPI tomorrow, put it in that form. If you already emailed me, don't worry about it. I got your email. I'll add your email to our thing. But if you haven't already guessed, if you want to guess what CPI will be tomorrow morning at 8:30 a.m. Eastern time, put your guess in that Google form and it's pinned to the chat on YouTube. And we'll give away some swag to whoever gets closest. And I'm going to set an arbitrary deadline of like midnight tonight for that. So the link is pinned there in the chat everywhere. Okay.
2 reports tonight. We got Unity, Roblox,
yeah,
SoFi.
You got EA,
Coinbase.
You got Rocket. You got SoFi. You got Unity. You got Roblox. You got Oxy. The Trade Desk. That's more or less it.
Trade Desk is tonight. Yeah, it is there.
Yep.
Then you got Disney tomorrow night. Again, nothing's going to matter past tomorrow morning, though, at 8:30, because we're going to get so much new information. It's going to be green light. What is that from was green light, red light on that on the Netflix, that show? What the heck, the popular show?
Squid Game?
Squid Game, yeah. Remember that game, green light, red light, or red light, green light?
Yeah.
They played off the bat.
Yeah.
That's the market tomorrow.
Okay.
Green light, red light. Remember? That's what the market's going to be tomorrow.
I do remember. And then everyone died.
That's the CPI number. It's going to be green light or red light. Get ready to go.
Everyone died, so I don't know if that's the best.
I know. I'm scared. Red light. Green light.
Good Lord.
That's
All
what's
right.
going to happen tomorrow at 8:30 a.m. It's going to be green light or red light. We're all going to run or we're all going to die.
Oh, great.
That's a good way to end the
That is
show.
not investment advice.
On that positive
Green
note,
light, red light. Red light.
yes.
All
good
right,
luck,
Triple
Great.
D. I'll catch up with you later on, everyone.
right.
Have a great day.
That's it. That's
Bye.
it. Gonna wrap it up here. Don't forget to smash that like. And hey, if you're gonna be in Vegas this week, why not come to the FinTwit 2022 conference? Go to fintwit2022.com. I'll be there. I'm leaving tomorrow night. Neil Hamilton, Aaron Bree, Luke Jacoby, Nick Shaheen, many others. Mark Minervini, who came up on the show today, will be there as well. So Friday and Saturday at the Aria Hotel Resort and Casino in Vegas. Check it out, fintwit2022.com. How are we doing on our likes today? I haven't checked in like 40 minutes. Let's get a few more. What like 370? Let's get to like 500 likes. And thanks to our guest, Joel Kulina. Thanks to all of you in our chat. Reminder, check out our redesigned pre-market page, benzinga.com/pre-market. Our show is there. There is news, headlines, movers, screeners, ratings. Everything you need to start your day is on that page. And last but not least, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Going to wrap it up now. Send you over to live trading with Ryan, Zunaid, and Money Mitch. Everyone have a great rest of your day. I will see you over on Benzinga Live in a few hours.